Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, everyone. Welcome back to Empire. Very excited about this one. We got Santi. I think Rob's going to join us in a little bit. And we got a friend of the pod, Jordy Alexander from Selene. Jordy, what's happening?
How are you guys doing? What an exciting time to be alive.
What an exciting time.
It truly is, man. You know, we are recording this on the back of the FOMC meeting yesterday. You're our macro guy. I mean, none of us here are macro guys. So, Jordy, what's going on through your mind?
Wait, we're not going to talk about the most exciting thing, which is that the Knicks won the World Cup. New York is electric right now. But I guess you guys aren't here, so that's all right.
Listen, man, I don't know about you guys. I've been getting roasted all the time because I said the U.S. has a pretty big chance of winning the World Cup. And this is like we've talked about like how crypto bros are more skeptical about crypto and like non-crypto people are like excited about the industry.
Like U.S. people are like, the U.S. will never win.
Man, I'm Mexican. Mexico will never win the World Cup. It's just like structurally, like they just will never. But the U.S., dude, long U.S. If they don't win this World Cup, they'll get pretty far. And the poly market's like 2%. I think that is, in my opinion, a bit. I will. I was with the guy yesterday who claims to be like a big football guy. I was like, what are the odds of the U.S. going to the semifinal? In the final, he's like, I'll give you 20-1. 10-1. I'm like, all right. And then I went with size and he's like, no. It's a good. Kicking out of the trade.
I'm sure you can find like the public odds pretty comfortably and get size on if you want. I don't know. I can't see it. That would be a dream too far, but you never know. I mean, even in '94, I remember when I was a kid, like they had the World Cup and they did quite well comparatively, you know, for how
comparatively. Jordy, where are you from? What's your team?
Who is my team? You know, I was a big Messi guy, but now that he's won a chip, I'm not as like emotionally invested in him getting another.
You're an underdog kind of guy.
Yeah, you know, if he wins it again, I'll be happy. He's my favorite player, which is cliche now that you know he's clearly the GOAT. But doing what he's doing at 39, I'm 41. I'm also trying to extend my health span and my like athletic abilities into my 40s as he is doing. So I kind of maybe I'm still cheering for Argentina. I want the old guy to show that 40 is the new 30. We can still get it done. I just did my
Cristiano Ronaldo's 41. He's playing pretty good, but he has like a insane health regime. But Jordy, I mean, I know you've been long in the longevity track. Did you see the what is it, Mind Journey, today or yesterday announced Mid Journey? Like I think like it's. I don't know if you've been following like just it feels like it's the next leg of advancements.
I'm now very long Eli Lilly because I just think that I think my prediction on this stuff is that the only way to turn public sentiment on AI, because we're going into the midterms right in the US, and there's gonna be so much hate towards data centers that the Anthropic and OpenAI have to. I don't know if you guys saw. I think it was Sundar got booed, or there was a walkout. I think it was Sundar did a commencement speech at Google at Stanford, and the students walked out on the guy. So the amount of hate towards AI right now is it's not even close to an all-time high, because that'll be around the midterms when the politicians have to be anti-data centers. But I think the only way back that they come out of this is to convince the public that it is making everyone healthier. And if you look at like, I actually wouldn't be surprised if OpenAI or Anthropic in-housed a lab, like a biotech or something, and they bought a biotech company.
Yeah, for all the promise of AI, I feel like the two categories are coding, that is being completely revolutionized. Software is not going to be the same ever again. And then the one that is slowly happening, that will take years, is health, biotech, discovering new drugs. And the amount of money that people spend on like GLPs compared to AI, we all talk about the AI spend, and a lot of it's circular bullshit. But the amount of money that people are spending on like just trying to not to be fat asses is actually like, it's more like, that's a bigger industry. It's a bigger TAM. Everyone will spend money to be healthy and look good, and especially at this point, everyone has to focus on this if you're going to be competing in the marketplace. So very bullish on that category.
Are either of you guys on peptides?
No.
So I don't like needles, and for the time being, like, I just don't want to inject anything. And I'm not against the concept, and I think the concept is good. I'm taking some peptides that are bioavailable enough orally that are more chill peptides. They're not GLPs. But I'm on like 4 or 5 peptides that have some oral bioavailability, like BPC, NAD. Be taking some SLU PP 332, the sloop. So there's a few that are working. Yeah.
What do you report? Like, have you seen any measurable
I have
change in
lost,
your health? Or
I've lost 12% body fat from 26 to 14, which is a huge change.
and that's like you're still exercising the same amount. You're like not really changing much other
This,
than
no, I am. Like, this is not the peptides. This is like hardcore 15, 20K steps a day, like 3 times lifting, just clean diet, doing everything.
Right. Yeah, because I remember looking at a timeline like a year ago. You started on this health train and really optimizing your sleep hygiene and all that. And yeah,
Santi's
I mean,
like, I remember a year ago, you weren't looking very good. And
no. But he had you had a, was it a year ago, Jordy? It was like a good post around like, hey, I'm like
It
really
was
biohacking
it was
here.
in November, I think.
November.
So it's been about 8 months that I've been pretty hardcore. Hey Rob, how you doing?
Rob, I don't think you want to join this show, my friend. We're talking longevity and peptides. We're not talking stables today.
Maybe I could use some peptides. I feel like I've been, I've had like one of those months. I've been traveling a bunch, been eating too much. So like, I feel like I need to be here to learn something.
Yeah. All right. Let's can I shift us, Santi, or you want to keep going?
No. I was just gonna say, do you think that public sentiment is now there's like a greater public enemy? It's no longer crypto. Like, would you go as far as saying that there's more negativity or negative sentiment on AI than it is for crypto? I guess crypto just faded to irrelevance.
I think it's just inequality in general is going to be a huge theme over the next like 5 years, and it's just going to get bigger and bigger going into elections. I think Elon being a trillionaire and swinging like 600 billion in a day is probably not what these college students want to see. So it's less about AI per se than about just like people feeling left out of what's happening. And I'm very lucky. I'm in the, crowd that is on the forefront of being able to look at some of these deals and seeing some of this stuff. And even I feel like left out. And so I can only imagine when you go like, several degrees down, what it feels like. So I think that's the main sentiment.
I was just going to wrap up this segment by saying there's a great 20BC podcast with CEO Perplexity that I think just delivers like a really compelling message of like, dude, anything's possible now with AI. And he along with other folks like the semi-analysis guy and others would be like, it's really been a disservice that Dario in particular has just been so negative about just emphasizing on job losses. And it's just like someone, so he went as far as saying like, someone just tell Dario to like stop talking and have someone else.
Well, no wonder Fable got. We should actually talk about this export ban on Fable, right? Like, it's no wonder that. So June 9th, I think about a week ago, they released Fable, which is like the open, the public version of the hot Mythos model that everyone was so scared about. And I think it was like 3 or 4 days later, Lutnick and U.S. government basically said, we don't want you to export this to the world. There's like an export ban. Anthropic can't limit it to just U.S. users, and so they shut it down. So I think it was the first example of, obviously it's worked well for him to talk about how how crazy the Anthropic models are, and how it's going to create job losses. It's good for fundraising until the U.S. government, until that message turns on him. So,
I mean, I think there's an interesting question here too, because Jordy made the point around everyone feels like they're missing out in inequality, and I totally agree with that. But I do wonder, like, I don't think it's just that. Like, I do think that Dario basically and like others basically going around and be like, hey, like you're all like over and over and over again has created a lot of fodder for like misperception about like what we're doing. And there is some people on the timeline that are, spinning positive messages, but it's always easier. It's like human nature to be negative. And so even like the people who aren't building in the space, but like a lot of the investors, the Citrini article and a lot of these other things, like people like these sort of like doomsday scenarios in a lot of cases. And like the other side of it is just like to the point around the Perplexity CEO, just being like, actually, like, entrepreneurship is rising at quicker rates than it has in like decade. Like people are building new things with like less people and less money, and it's more efficient than it's ever been. And so there's this really interesting way or a kind of storytelling problem that I think we have at the moment, and that definitely didn't help Dario and Anthropic with the U.S. government. Now I think clearly in my mind there was like overreach there, and this tells you a lot about where the world's going, and it's not good for AI production and innovation. But there is a clear storytelling and PR problem right now.
Yeah, if you look at what all the CEOs like Dario, Sam, Demis, and obviously Elon's been long at this game, they're spending all their marginal time on doing media, and it's a huge amount of interviews that these guys are giving. Like, I think they've realized that the highest ROI as a CEO of like, a frontier lab is just to try to sway media in your favor. And obviously they're not running their companies. Like somebody else has to be doing that. They're just going around.
Well, Dario, it came out that Dario has one direct report, just his chief of staff, and that the whole rest of the company reports to his wife.
And I think that's his sister.
I didn't realize that. I'm not. Is that
Yeah,
true?
yeah. I think so. He was on it, but he was like, "This is my sister."
No. I think his chief of staff is Leah. What's the guy who's making a bunch of money? Leopold Aschenbrenner, whatever. What's that fund?
Situational awareness.
His, I think, girlfriend or his wife is Dario's chief of staff.
Got it. Well, what I will say is I saw so Fable got I tried it out on Friday when it came out. It was like waiting for the moment to happen, and then it got banned on, I think, on Sunday. And then I think the conversation really, because we got to bring it back to crypto, is open source models. And I think there's been a lot of chatter around like, hey, this just further emphasizes the need to have open source models, combined with the idea that like performance for open source models is catching up to some degree. And so I don't know if we should talk. I think we should talk about that in particular. Like, I don't have exposure to any of these projects, but like Venice and some others, like I feel like that if I were to pick like a narrative that is percolating and will just continue to be more important, is this idea of open source models, and that you shouldn't be using like a Ferrari to get for everything, right? Token spend should be a little bit more discerning, and routing token spend is going to continue to be a theme. And so I think this is a moment for crypto to shine if it can deliver on the performance. I see Rob rolling his eyes.
Yeah, well, I'm a little interested in majority things. I do think there's a question here about what, like let's say an open source model was the most powerful model, right? And let's say, if you believe Dario's analogy that this is like, this is like a nuclear bomb and like has the power to wreak havoc or to do good or to deter people, and has the power to do a lot of different things, right? And if you believe that if an open source model is the equivalent of a nuclear bomb, it's not clear to me that the government is not going to want to get in the way of that as well, right? And if that's true, like they will try to find a way to limit your access. And while I believe like privacy is a human right, I don't think that, crypto wants to be in this situation again, where we're like, well, actually the main use case of this thing is to circumvent the government, right? I think we need to figure out a way to work together on those two things. And so I agree that the open source models are good. And I agree that they're getting better. And I agree that there's a lot of different use cases for which a lot of these non-US models should be used. And I think access and privacy are a human right. But I think, access and privacy in this specific instance where people see this as a potential, national security issue, is going to be really hard for us to navigate as like, oh, hey, this is just for crypto, right? Like for currency, it's a little bit easier to make that conversation. For what people believe is a nuclear bomb, I think it's going to be hard to manage that.
I think the geopolitics are super important as well, given that they've kind of said like America first, which doesn't really work well. I mean, you immediately saw people saying, first of all, the employees are many of them not American. You have DeepMind, which is like, UK based. And then you start kind of talking about like NATO coalitions. Okay, maybe Europe needs to let us in, guys. Like, we Europeans have been not innovating anything, but we're kind of like aligned, so let us in. And obviously on the other side, you have, China pushing very hard on their own models. And the open source thing, I think I'm less interested in them ever becoming frontier models. I just never believed that was ever going to be possible. But I do think that being 6 months behind is not a big deal when the government is basically like censoring that extra 6 months of progress and not letting it be public anyway. And so to Santi's point, for like normal tasks, you will probably just want a cheap open source model. And that's something that you can run locally or, with crypto rails. And the stuff that is the cutting edge, the dangerous stuff will probably be out of view. I think that's already established now. The gauntlet has been thrown by the US government. So it's a very interesting game theory.
Yeah, this reminds me a lot of in crypto we've had certainly like folks like countries like China banning currency, and there's always a way to like circumvent that. But also, you remember the days where Bitmine would release kind of their ASIC, and most people would say, yeah, it's like 6 months, like they've had 6 months or 9 months to mine ahead of you and just like and then like monetize it. I feel like that's going to be a theme in AI. People that have access to compute, people that have access to, it's really hard to build data center. It probably takes, I think, 4 years to like get a new data center approved. It's only going to continue to go longer than that unless, we figure out space with space AI. But I still think there's a place for open source models. Even I think Haseeb had a pretty good take here. Like he was like, look, for a long time, I've been saying that there's a gap between open source and closed models is going to widen because of the data gap, because of the hardware gap and increased restrictions. He said I was wrong. ZAI is on another level. Incredible benchmarks on this model. He's like now running his Hermes agent on GLM 5.2 via Ask Venice. So yeah, that's pretty interesting.
It's interesting. I am like much more bullish, not on like privacy rails. I think kind of agree with Rob's point. Like the government will always put national security concerns and bulldoze everything. I think tokenization is really what is showing to be by far the most promising. And I think we'll have a big tokenization of like AI, either compute or tokens, like to raise money for the next run, or like there will be some tokenization happening. I think it's just the rails are way too good. And I'm sure that OpenAI and all these guys are looking at it. I mean, everyone's already experimented with some amount of crypto when you look at these labs. And I think tokenizing, I mean, we can talk about the Coinbase thing later as well. That was very exciting to see that there's so much kind of overlap happening now. But that's the much bigger category.
Yeah, I want to like I kind of like I agree with Sandy's point that like the gap between open source and like closed source models is closing, or at least they're not that far behind. And I think that will probably continue to be true. It's just that like if everything is getting way better, it'll still be a national security issue, right? And like to the point that you made earlier around, well, China, banned, Bitcoin mining, and then there was ways to get around it. Well, yeah, there wasn't really for a lot of Chinese people in China, number one, and they were like they really got a stranglehold. The industry basically died there. People moved out of China to continue to operate in the industry. And in this case, it won't be like, oh, well, just like China did it. It's not going to be like, because of the fact that people see this as an arms race, it is going to be that like there are control. If it gets to that point, there's potentially controls in the US and in the EU and in China and kind of everywhere. And that becomes like the free flow of like, AI models could theoretically just come to like a halt at some point. Like, this is a little dystopian, but like it doesn't seem that crazy to me.
Robots and machines will outnumber humans on chain, and peaq is how they get there. Peaq OS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more. No, I think you're right, Rob. To try to make this maybe more tangible, so let's say there's 3 buckets here. There's the closed source providers. You go long. It's almost like, okay, so what do you do with this information? You can go long Anthropic or Google or OpenAI. Let's call that one bucket. You could go long the open source models, which are like, Minimax and DeepSeek and Chinese models, but also I think Meta's models open source. I think maybe XAI might be open source. Let's call it the open source models. And then there's just the routers, or you could actually bucket this as like there's Open Router. You could put Venice probably in this bucket too, where you kind of say that. I think our philosophy at Blockworks is that most people internally at Blockworks actually shouldn't be using the frontier, the single greatest like when Fable 5 came out. The natural inclination is to want to ask it your normal questions, but it's actually like only probably 5% of the work that we're doing at Blockworks should go through Fable, and we should actually put like most questions should be done on like 4.6 or 4.8. So yeah, how do you think about those 3 buckets, Rob?
Yeah, I don't think that's wrong. But I also do agree. We're seeing this a lot where like token maxing, I think, is like now there's like a backlash against it because it kind of makes no sense. Just spending more money to spend more money is not a good thing. And for the vast majority of workflows today, you absolutely can use an older model, and you should be using an older model, especially for the things that most people are doing. And that's only going to get more true as these things continue to get better. And we're seeing a lot of like infrastructure companies now build to do like quote unquote like smart routing for like different types of workflows. And I think that's probably the future, is that you'll see this like infrastructure layer, especially for like the agentic, a lot of the agentic work that's happening, where, instead of you, Yano, or, engineer at Blockworks having to like pick what model they use and figure it out, these things are going to have so much data that they're going to have a company or some sort of router with compute and that they're training themselves in between, that is going to be able to take that inference and route it to the right foundational model for that use case, for the speed of which they want to do this thing on, et cetera. And so I think we're going to see a wave of companies kind of in that middleware layer.
Are you guys enforcing that at the company level? Like you would just tell employees that you have a cap on token spend, or is that still very much uncapped?
We've basically just run it uncapped for what for our thesis. So this was, remember the podcast we did like 9 months ago? Because we needed to get the whole company using AI first. So that was like the first thing, was like almost, it wasn't mandatory, but it was like we had to get everyone there. So we basically gave people an unlimited budget. We wanted people to post in this shared Slack channel called AI Kitchen, where it was like inspiration. It was like, oh, if you're a salesperson, like share what you're doing, and an engineer can see it, and then a data analyst can see it. So, but now like actually Ramp just rolled this out, where you can actually start to get better visibility into your AI spend. So you can be like, oh, the finance team is spending like 17% of our tokens. Like, what's the output there? So we are now just starting to clamp down on token spend. And you don't want to clamp down too much, but like starting to we basically said run wild for 6 months, and now let's start, and then we'll learn what the ROI actually is. But now I think Rob's right. Like we're entering into the second phase of token spend for companies, and you have to get a little more tight with it.
Yeah, and I didn't fully answer your question earlier to Yano as well, but like I think that's happening. And then I think to your point earlier about like, oh, Meta is like open source and whatnot. Meta's still a U.S. company, and obviously, the most of the employees like live in California, and so like if they open source something that like is seen as potentially outside of the national security interest of the U.S., like that thing will go away. And as quickly as there will be a lot of attempts to try to block any future innovation there.
Yeah.
There's this goes back to like Leopold, like I think like was raising the flag this at OpenAI, like you should not be open sourcing stuff, like it's a matter of national security. And the question is like, have models become just so advanced, and have we reached the point where like the stuff that is already open source just poses a threat to national security? Because I think like I saw on the timeline, like even during that weekend, like I think it was some companies are just really good at kind of backing into the weightings and all this stuff. And yeah, I'm it's what I'm trying to get is like the so what, like yeah, you're going to clamp down, but you're already released an open source model that is pretty capable, pretty sophisticated to do the stuff that perhaps you thought was a threat to national security.
I think we're still in like the third inning or the fourth inning of this, like if even that far. And I don't know what Jordy thinks.
Yeah, I think fourth inning sounds about right. There's a lot to play out.
How many innings do we have, guys? Before on what scale are we?
Santi, crypto's first inning, baby. First inning for crypto.
Super cycle.
Jordy, you have do you have outside capital, or is it just your prop capital that you manage?
We don't have outside capital at the moment. I have a personal passion for asset management and efficient use of assets, and that the world doesn't waste their asset allocations. So at some point we will have some sort of asset management business. And I think proving to the world, for 5+ years that we're good at managing our own assets without having to ask for anyone else's is a good starting point to then be able to do things properly. And we've had conversations with some sovereign funds and that kind of crowd.
I have a passion for efficient asset allocation is a beautiful line in a deck. So
thing to say, but yeah.
So wait, Jordy, so my actual question here is like, you can invest in anything because it's your own capital, right? So how do you think when the markets are so crazy right now, like you can buy anything from the memory stocks to Venice to SpaceX, which just continues to rip, to Hyperliquid, or like as small cap tokens? Like how are you allocating right now?
So most of because again we don't have outside capital, so most strategies that we do have some sort of capacity that we want to fill. And we can either do very high sharp systematic stuff, or we can do more like tactical trades. Like SpaceX is something we traded very long into it, and now kind of getting flattish and then waiting for the inevitable short that we're going to put on, given that this is a low float shitcoin, as others have said. Like we've kind of seen this play out before when it comes to just month after month of unlocks. And the key sign I'm starting to see our OTC brokers, like the crypto brokers, are getting locked SpaceX shares. They're getting flow for locked SpaceX shares. And so I'm like asking what the discount is. I'm doing the same modeling I do with like the locked tokens.
Crypto was made for SpaceX. You know what I mean? Like this is the moment for us to repurpose and just like trade the shit out of. This is the Ansem. Like we got to get Ansem on here and see what he's doing. But like, so Jody, you're a great person to talk about this, because like, look, if you're have a mandate with LPs to invest only in crypto, then like you could try to get a waiver, but you have to stay true to your track record. And that's not a dig. That's just like you have to stay disciplined and invest with cycle. But because it's mostly prop, like how have you like changed your portfolio since 1010? Like why even playing? It's been pretty abysmal and difficult, other than Hyperliquid and maybe some market making stuff. But what percentage of your book is long, short? What percentage of your book is like market neutral? And have you made drastic changes to the book over the last like 6-9 months?
I mean, the venture book is since 1010, I think we've done 3 crypto deals total. We did Canton, we did Catalyst with Sequoia, and we did one more. We've done maybe like 15 to 20 frontier deals between like AI and biotech, and the other stuff we're bullish on is of course like defense, precious metals, like not precious metals, like rare earth stuff. We're trying to get these bottlenecks
like a copper, or like deeper past that.
and shit, like like whatever is like the stuff that is going to be like the bottlenecks, whatever China's controlling. You have to kind of play out that we're going to have some kind of escalation between geopolitical rivals. I think like it doesn't make sense to try to like back prediction market number 18 at this point. Like we do see like some people trying to get into those categories, but I just tell the founders, hey, like we'll happily invest at the next stage, like once you prove traction, but just like pre traction, there's just too many people with a pitch deck, and I'm not playing this game again. Like I just want to see some proof in the pudding before doing it, and we're happy to get later. Like we'll join the more expensive round.
Is crypto like the too hard bucket right now, given the opportunity cost of like doing stuff that the market likes and clearly is in favor?
Crypto, and like I mean, like I think like there are things in crypto that can do well. Bitcoin has been very disappointing with kind of Saylor's blunder with like the 2 billion buyback he did, but still bullish Bitcoin. I think the L1s, it's hard to see a catalyst there for like the ETH SOL kind of trades right now. I'm not sure what those would even be. Hyperliquid is interesting. We are still long, but we've been scaling some out. At this level, the revenue hasn't changed in like since ever. Like it's never changed. It's always just like under $1 billion a year, sort of like in that range. And they can potentially turn off this growth fee switch that right now they're like really reducing the fees for the TradFi products, but it's not clear how that would affect volumes. And it's kind of like Uniswap. Like you always said, like, oh yeah, like Uniswap can just turn the fee switch on whenever they want, but it's not that simple. Like LPs want their share, and then people won't trade above a certain slippage. So it's not that simple. And I think Hyperliquid can't just like triple the kind of RWA fees that overnight, and that's going to go smoothly. But still, like the multiple now feels a little bit driven by like the DAT buying more than the expansion of their trading.
Yeah, we had the podcast, it was a month ago when it hit 63 or whatever. We were like literally on the pod while it was in 62, 63 for the first time. And we said on that pod, or at least I said on that pod, that I thought it was like fully valued at that point. But that like, clearly there's momentum and there's flows and there's the DATs and the ETFs, and there's excitement about like what this could be in the future. But I think to your point, Jordy, from a multiple perspective, from like a fundamental perspective, that argument has kind of gone away now. I think in terms of like, oh well, it's like undervalued on a relative basis, and so now like very much, I think you have to underwrite whether or not you think this is just going to take market share from centralized entities and CME and like all that kind of stuff, which I do think is and maybe we should talk about the CME, Terry Duffy stepping down, but also them, filing suit against CFTC today. But I think it is hard to underwrite, and I said this before, like DeFi really taking a market share from like the CMEs and ICEs of the world any more than it has today in the near term. And it was maybe in the long term, as I think Mike Seelig, Chair Seelig of the CFTC on the pod that I did with him, he stopped talking about DeFi and started talking about on-chain finance. And I think the reason that he made that distinction was very clearly around like, oh, on-chain finance, where the exchange can operate within our rule set that includes KYC, AML, appropriate reporting, et cetera. And we see a real need for that, but we don't necessarily see the need for, or do we want to perpetuate, DeFi as we talk about it, which is, calling it the non-KYC, permissionless, et cetera. And so I think that does feel to me like where hype is right now, and that's been the story recently. So I guess the question maybe to you, Jordy, and it is interesting to hear you talk about some of those rounds that you just did, because you talked a little bit about like the fundamental of crypto, and then like at least one of those rounds that you did, we looked at and we were like, this is like zero revenue, and this is getting done at like hundreds of millions of dollars in valuation, and we're not really sure how you underwrite this thing. But I think maybe just the excitement for what the world can be has shifted to other types of verticals and other types of industries.
Jordy, on Hyperliquid, like you always need like something to like initiate the next bull run. Solana did that, I think, last cycle, very cleanly, like from $8 to 60, and then the FTX sales, clearing, and bankruptcy, I think, like cleared air to went all the way to 240, and then I think there were spillover effects to that. Interestingly, in this cycle, like obviously prediction markets have privately like been prediction markets and rain, and a few like growth investing that the public market, to your point, public market didn't participate in that. So Hyperliquid, I mean, I guess like there's some wealth creation there, but it's interesting hearing you say that there's like a cap in revenue. It sort of stayed flat. Mind you, this is on the back of like very interesting volume for RWAs, to your point, oil, given the Iran escalation, and then Cerberus IPO, and then SpaceX. If that's the cap, then like, and if Hyperliquid has that ceiling at $60-$70, like, what does that mean for the rest of the year? What does that mean for the rest of the cycle? Like, what are you excited about that you could, this is why I sort of was mentioning open source models, and maybe this is where Venn is kind of, there's some sort of renaissance of crypto and open source and what have you, and some AI kind of things run.
Yeah, it's a very valid framing. I think, first, like the Solana thing, I was always kind of maybe like the only person really warning that the Solana thing was not going to last, because at the end of the day, it's not money. They're not trying to make it a monetary instrument. And then and it's not a good monetary instrument because it has unlocks like for years. Like it's not, doesn't have the things that you want as like a monetary instrument. And when you take that out of the way, like, is it worth 250 billion based on a multiple of like, fees burnt? Like it doesn't really like make sense. And I think people have kind of started capitulating on that being on chain NASDAQ. It already seems like it's doing okay, it's doing fine, but like, people want to trade perps. They want decentralized in their funds, but they want a centralized. People love a centralized thing that just works. Like even Hyperliquid in many ways is more like a SEX. Like it kind of has that central control. It's not trying to like fill blocks in a certain way. So that's played out. And then the hype thing is similar. It has this cult following. People have done really well. The fact that people got in early and are natives is great. But revenue-wise, the only way that it goes up is through the RWA stuff, because altcoins, haven't really grown, or is not a growing segment. And they have Trade XYZ, which is a private company. Again, to your point, like people aren't participating in Trade XYZ. They've tried to farm it, but there's no token on the horizon. And they're the ones like, I've participated in discussions on HIP3 because, we kind of tried to help with the Dream Cash deployer. We tried to do a Tether one. It's been very difficult to do USDT on Hyperliquid now that they've enshrined USDC. But participating in like what's the number 2 deployer, and you kind of see that XYZ is sort of, it's in a really unfortunate spot because they're sort of like the core team, like they're sort of trusted as the core team because they've had that like close partnership. But the revenue from it, I think they're raising like a new round, like, in the billions, and that's not going to anyone. Like no one's getting XYZ revenue, and that's the thing that's really growing. So there will be some conflict potentially between all the stakeholders in that ecosystem. And it's right now it's kumbaya because it's going up, the DATs are buying, but as we saw last year, when the DATs stopped buying, things kind of change real quickly. And between the XYZ shareholders, the hyperliquid stakeholders, the people actually paying the fees, like they're only willing to pay certain amount of fees. Like that potentially is clouds in the horizon, even though Jeff is clearly being, like an amazing executor for what they've built.
So Jordy, if you don't own Hype, you don't own Sol, Bitcoin's a little scary because of the Sailor blow up. Are you long any crypto tokens right now?
We are buying more and more Bitcoin on this dip. I mean, you either bet that this thing is like going to zero somehow, or you just wait out the storm. And I'm not saying the storm is just gonna be fine like right away. I am surprised the stretch is at 85 as we speak, or something like that. Which, like, is there a point at which like Sailor just starts buying that back up? Like, just kind of,
Yeah.
that would be like the Justin Sun playbook. He's always like depegged his stable coins just to get them to 80 and then buy them back and kind of.
Yeah, while we're recording, it's at 85 was earlier in the pod, I think.
But he's got less than 8 months of dividend coverage right now. Like I think he's good.
I want to go there, Rob. Like what does that mean? Like when someone hears you say it's at 85, like can you unpack that for the normal, like for just regular user, and what are the implications of like what the market thinks like Microstrategy can or can't do, or if it's going to be a forced seller?
Well, maybe Jordy should talk about it. He's the trader.
I mean, look, like there's definitely a panic that this thing is going to be like a Luna, where it just sort of spirals down. I think it's way overblown. He's still raising 200 million a week, and he's keeping half of it cash, half of it. He's still buying Bitcoin just because I think he wants to show like, okay, let's show that we're not stopping to buy Bitcoin. I don't think he's going to sell Bitcoin anytime soon. Obviously, like if you're a shareholder of MSTR, there might be reasons not to be like very happy right now, because that's the thing that's getting thrown out first. But the fact that Elon is wealthier than all of Bitcoin and he's like one guy, I just think that this asset is still very undervalued as the primary monetary digital instrument. We are buying Zcash. I know like a lot of discussion about Zcash and like the bugs and what's going on. I think at this price, it's a good hedge as a potential monetary instrument, and I do like some things about it quite a lot. So we are buying more Zcash in the 400s. Yeah, a few more tactical plays.
Waiting for your venture book to launch or de-risk.
I mean, there's also I think there's a point though that like the market is flashing, and I do think it's like overblown, but Stretch at 85 cents does flash. And by the way, I think Stretch is, so they have some convertible like senior notes that's it on like top of the capital structure, and then they have Strife, Stretch, Strike, Stride, and Common. I think that's the way the waterfall works. And like Stretch is kind of like near the top, and so if that's at 85, like there is, to Jordy's point, like obviously the price at least is suggesting to you there's a potential that like they could have to unwind this whole thing, and that I think it's like a 8-ish billion of convertible notes, and then some stuff underneath it. And so I think it's suggesting to you that like the actual net asset value of the company, if they had to sell right now, would be like half of what its market cap is today, right? I have to go and do the actual math on what that looks like, but like that's scary, right? Now it's probably overblown, to Jordy's point, and we're probably it's a point in time flows thing, but like the market is flashing red warning signs at you very, very hard.
Steady lads. This reminds me. Look, I got roasted on timeline because I said, look, there's a scenario where Bitcoin just goes down to 50, 40, and at that point, like what's stopping it from? I think, and I get it. Look,
I think the difference with like Luna is that when Do Kwon asked for a buyout from like Jane Street or like Jump, they looked at it. They were like, okay, we could put another billion again, like a few more billion, but like, do we like no, we just want to keep our money. But if you look at like Bitcoin at like 40s. There's too much money awash in the world. I just can't believe that you won't get one of these guys, just like the Jane Street or someone, just step in and just say like, yeah, like
But
this
why?
thing.
But why? But dude, why would they? If you're nibbling at this shit, like, you know what I mean? Like, I didn't hear you say like we are fucking loading the truck of Bitcoin at 66. Dude, you're doing other stuff. You're buying rare shit, like as you should, because you're prop. That's what I'm saying.
He's
Like,
investing in really overpriced AI rounds, like the
but,
rest
but
of the
are
world.
they? It doesn't matter. Like,
Sprinkling. We're
crypto's always
sprinkling,
been like,
Rob. We're sprinkling on the.
no, we just want to say what I'm saying. Like there's a disconnect there, and like I'm not buying this stuff right now because I shouldn't be. Like, I just don't think I'm getting paid enough to long crypto. None of crypto right now. Like maybe backpack, and I'm an investor, and we like because they did some interesting stuff.
I'm not
with
long
SpaceX.
anything in crypto except for this
I-
one thing
No,
where
no.
I'm a bit.
That was the most random thing to bring
No.
up.
But I'm long already, like venture stuff that I think is working. But I'm not compelled to go out of my seat and like move capital away from public equities or fixed income or whatever venture, not ex crypto, into something like Bitcoin because it's in the too hard bucket. Like, I'm not gonna buy Bitcoin right now as this thing unfolds, looking at stretch at 85. You know what I mean? And I think the game theory of that is like, to your point, who steps in? And I get it. Like, this is not Luna. There's whales out there. There's a Larry Finks out there. Like, you have ETFs, and at some point, this like becomes compelling for someone that saw Bitcoin at 120 and didn't catch it then, and is now, oh, this is at a discount. I should have it in my portfolio.
I think there's a lot of those people, like not just the Paul Tudors, the macro guys, but there's a lot of like the tech guys that, they see it and they're like, yeah, this thing's going to go back up. And now I have so much money from SpaceX or, whatever thing I did. It's at 40K. Like, it's like, like the whole, you could buy 5% of the thing.
Yeah, well, I think Jordy made a point here that I actually want to sit on too, which is that like I actually think there's more optimism about crypto and the non-crypto like Bay Area guys today than there is in the crypto entrepreneurs. Like there is like if you actually go and you talk to Elon and you talk to, I mean, not even like he brought up, like Brigger or Drunken Miller or like, Wences Cazares, who's been famously in this forever. Like Elon and like Sam Altman are more bullish on crypto today than like we seem to be on this podcast of people who make all of our money from the space.
That doesn't mean that you could be. I mean, so out of the 100 SpaceX employees that made over like 100 or $400 million, how many of them their wealth advisors saying, "Listen, you got to put 5% of your newly minted and diversify away from SpaceX into Bitcoin"? Like, how many? Do you believe that those conversations are happening?
I only need one Elon. I don't need any of these other guys.
Yeah, exactly. You need one guy, and like, do these guys have space? Like advice? Like, do you think they have some like old financial advisor in a suit? Like, I know.
But most of the flows I think have come from RA. Like when we went up to 120, we talked a lot about where the flow is coming from, and I think RIAs still play a huge gatekeeping role in the wealth of America. I see Rob agreeing with me. And
I have a thing. I have a point I want to make after you're done here too.
Okay, I will be quick. So if that's true, then I think you have to again go into the psychology of the wealth managers and the RIAs. Are they gonna put their neck out and say, hey, you should probably get exposure to Bitcoin
Dude,
now?
I think they are, because what are they going to say? Go buy SpaceX at 3 trillion, or go buy Google that's up like 100%. Like,
But my point is, a lot of them did that over the last year, and now they're in a very uncomfortable position with their clients, where they're like, dude, you should have just told me to like go long everything else except this shit.
Yeah.
I don't believe we're fully penetrated at all, by the way. Like, there's only a very small subset of RAs that probably did that. And so from a TAM analysis, you could probably get super bowled up, but it's difficult.
Well, but I was going to say that, and this kind of agrees with your point, which is that the amount of alternatives that are making their way through the RIA platforms and the wealth management channel has exploded, and there's insatiable demand. I mean, you probably see it with like your bankers, that you're seeing like the amount of opportunities you're seeing on the alt side or the fund side is just like so much higher than it used to be, and I think Bitcoin is part of that story for a lot of these wealth managers. You're seeing a little bit more of that, and we've started to see it a little bit with I think some of like the big wirehouses specifically are starting to say, oh, well, like, do a little bit of IBIT or whatever, because we've just seen alts explode in interest. Privates, private equity, some of the funds, IPOs, et cetera. I mean, like
But it's
iCapital.
fairly concentrated, no? Like when you private equity as a whole has not been like a lot of people are like, hey, look, we haven't gotten DPI. It's really like they want to get into single SPVs of the next SpaceX. And that crypto doesn't fit into that conversation. I've seen single SPVs from like wealth managers say, hey, look, we have neoprimes, we have robotics, we have, we have the next frontier model or what have you. And I think that's getting like a lot of traction. I am not seeing much interest in like traditional strategies because there's been just so immense wealth creation in the SpaceX IPO. There was like, if you missed it, you're really having a hard conversation with your committee. It's like, you cannot miss the next SpaceX. Go figure it out.
We're definitely in the FOMO phase, and I agree that you're right. Nothing of what I'm talking about is really going to play out until we're a little bit cooled off. And we're not going to cool off until people start losing money. The first money will be the dumbest money. Like poker taught me that if you just give it enough iterations, enough hands, the money will always flow from like the dumb hands to like the smarter sharks. Always happens. Right now, what we're seeing for the first time, these like passive flows, these 401ks are being targeted in a way that it's never happened before. Like owning, when I tell my family friends what to do, I just say buy the S&P. Just buy the index. It's fine. Like it'll always go up. This is the first time where it feels like there's financial terrorism about to take place. This thing is gonna like buy SpaceX at $200. Obviously, it's not S&P, thankfully, but it is NASDAQ. It is Russell, and it will inevitably like bleed. Like I'm 100% sure that this is gonna bleed. Like once unlocks start happening, the dumbest money is being targeted in a way where it just has to buy. And we've seen this in crypto before. Like why has crypto dried out is because the meme coin buyers and all like the kind of like less sophisticated people, they've just gotten extracted by the people who kind of like figured out how to get them. And now like people are figuring out how to like launch this massive IPO with low float, get it bought, and then it is what it is. Like it's kind of the game's over. And I agree with Santiago. We're at the phase where the family offices that we talk to, like these like SPV maxing, everyone, I'm talking like smart, capable investors that have never done an SPV in their life. And not only are they participating, they're like, I should make an SPV. And like, to be honest, even sometimes like, I'm like, oh, we got more allocation. Maybe we should make an SPV. Everyone is like seeing that there's so much FOMO from family offices. The velocity of money, like when you talk about inflation, it's not just like monetary supply, it's the velocity of money. And there's a lot of money that's been like sitting in like safe instruments is moving. The velocity is high. We're in like this stage right now.
But so Jordy, if that's the case, so I've always felt like we're just in a new paradigm since Silicon Valley Bank went under. To me, and the Robin Hood phenomenon is like the velocity of money has gone up, call it multiples. And what are the implications of that? Crypto continues to be extremely volatile. This is why I'm just extremely bearish anything that touches financial engineering. And I just, for the life of me, can't understand some of the decisions of MicroStrategy as it looks today. 2 years ago is very different than what it looks today. He just went out too far out and too close to the sun. And if you play this hand over and over and over, you eventually kind of blow up. But remove the kind, you eventually blow up. If you run like a Monte Carlo simulation of what happens to MicroStrategy, I think eventually that thing blows up. And
like who's gonna blow up? Is it the shareholders? Is it like they're gonna have to liquidate all the Bitcoin? I mean, there still would be a clearing price for all the Bitcoin, even if he like sells all of it. Like there'll be some funds that just
you have to either optimize for. The question becomes: do you optimize for stretch, strategy, stock, or the Bitcoin? Right. So because it's still trading above MNAV. The NAV is like 1.1, I think, or 115. So he can actually just keep selling small amounts of MicroStrategy, until the stock gets to like, I don't know, 0.7 MNAV. And this, and that would save stretch. And the Bitcoin would be fine, but MicroStrategy would get hammered.
The stock, yeah.
The stock would get hammered. Or he could kill the dividend, right? And the preferred would fall to like, I don't know, 40 or 50 cents on the dollar. And Yeah,
And
so
at some point,
it's
at
kinda
some
like,
point, some like a vulture fund steps in, buys that because they think that the
yeah.
warehouse Bitcoin eventually, like, goes to your point, Jordy. So maybe I'll peel back.
Or he
Like
could sell the
maybe
Bitcoin, or he could sell
yeah.
$5 billion of Bitcoin, and actually Strategy stock and Stretch would both do well. So it's I think you have to think about which of those three is he trying to save, and I think he's trying to save Stretch.
It just I think like he realizes like right now he's too important for Bitcoin to start dumping the Bitcoin, and that will just ruin his balance sheet. So he's gonna leave that last. And I think that's the right play. That will kind of keep things going. But again, my point is right now we're in an environment where there's just too much money awash. Someone will pick up distressed opportunities, whether it's coins or like, Stretch or whatever it is. There's too much capital for where it is. And we've already like dipped, I just have to like realize that the amount of dollars that we're talking about stepping in, even buying all of Microstrategy's Bitcoin, it's not what it used to be. Like 50 billion is not what it used to be. Like you can have Jane Street just come in and use their quarter one earnings. Their quarter one earnings, they can just like it's not the same. So
Or
I
Tether
think,
could just go in and step in a meaningful way.
yeah,
But so what do you think we see Bitcoin at back to, I don't know, 100K, or do we see Bitcoin? What comes first, Bitcoin 100K or Bitcoin 40K?
I think hard to answer that question. But what is clear to me is that the current path is going to be choppy. I'm not that bearish. I don't think we get that low. I don't think we see 40. Maybe we see 50. I don't think we see 40. I think that's very unlikely. We get maybe like on a 1 day kind of wick, but I really can't see that possible. I think where Bitcoin does extremely well is when people start worrying about the dollar again, which, you guys remember 2021, like there was a period after the 9% inflation, gold got hot, Bitcoin got hot. People were looking for some kind of like neutral asset. Gold, like in my opinion, just kind of sucks. Like there's just a lot of inflation of gold and it just can't move it. Dubai's getting bombed. You want to move your gold. Like, how are you like, it's not good. It's not great. So I still like the asset. I don't know. I think like the quantum thing was like the main thing that hurt Bitcoin 6 months ago. You got Chamath going on CNBC, like talking about quantum. And at this point, nothing's going to happen on that domain for, a few years. And so the only thing that can happen is positive thing. Like they announced that they've agreed how to hard fork it or whatever.
Yeah.
Um,
If I were Michael Saylor, I'd probably like try to really not go as much on CNBC or talk about like, because some of the interviews he's done recently are like pretty weak. Like, yeah, I think maybe privately go fly to and see Paul Tudor Jones and go meet some of the large guys that really can move the market. And if there is a possibility where Bitcoin continues to drip down to 50, you have someone like that. Because I heard in I think it was Invest Like the Best or Founders, where I think it was it Paul Tudor Jones that came out, like he mentioned in that interview that he still likes Bitcoin. Like we need two or three guys like that, or even an Elon to come and say like, hey, like Bitcoin deserves a place in the world and in the portfolio. And if that's the case, I think you have like a renewed interest. But you need an anchor figure like that, because Sailor's lost that on, for better or for worse. If you think, I actually think that's probably positive. Like Bitcoin should never have like someone like a Sailor. You definitely need like a drip of like good PR. You talk about like a lot of these CEOs doing a lot of PR. We need more Paul Tudor Jones. We need like a Ken Griffin, or we need like a you know that, I don't know who, like a Ray Dalio to come out and say like, hey, like I'm putting, like there's a Mexican billionaire Salinas who's like he's like 90% of his net worth is like, Bitcoin, but he doesn't compute as much as like a Paul Tudor Jones.
when is Santi going to rotate out of some memory stocks and buy some more Bitcoin?
I've been thinking a lot about what that price is, to be honest, and I think it's sub 50. To your point, like if I get a chance to buy Bitcoin at sub 50, I'd feel that it deserves a place in the
There's your
portfolio.
savior, Jordy. There's your savior.
The Lord Jesus Christ. There you go, ladies and gentlemen.
Guys, what else? Let's rotate the chat. What else happened this week? What else do you guys want to cover?
Coinbase announcement. Wow, a lot of stuff.
Yeah, Coinbase rolled out. I mean, I don't know if any of you guys have a list of everything that they rolled out, but bunch of stuff, agentic stuff. I can try to find a list right now, but bullish or bearish?
I'm glad they're trying it. Historically they've done NFT marketplaces and a bunch of stuff that kind of didn't really do much, but I'm glad that they're doing this and they're trying to really create a super app where you have an advisor help you build a portfolio. I love this category. I've always said that, like, if I'm going to be a founder of another company, it'll be like something that helps people just have an app and like manage their money. Like, I'm very bullish that this is something that should use crypto rails. And I'm glad they're doing this, and let's see how well they do it.
I think so. There was really, so I was at the event. I don't know if you were there, Yano, or anybody else, but there was really, I guess it was like 4 categories that they talked about. And so they kind of put it into, the everything exchange side of it. So it started with, okay, well, hey, we're offering pre-IPO perps, and we're offering, prediction markets, and we're offering combos, which I guess they couldn't come up with a different name than Polymarket was already using. And they were offering a bunch of other trading stuff. And then they're also like unifying their Coinbase International with the or at least allowing Coinbase International and Deribit to be for U.S. investors to be able to use them, and that all felt like par for the course, like what I would have expected. It's kind of what everybody's doing. Like you need to be everyone's saying, hey, we're going to offer one-stop shop to trade everything that you want to trade, and Robinhood's doing it, and et cetera, et cetera.
It's Robinhood, right? Is there another one? Like, is there another? Who else apart from Robinhood?
Well, all the international exchanges are doing the same thing, right? As well, right? So like Kraken's trying to do the same thing, and peaq and Bybit and Binance and like all these guys, right? And so like obviously it's a different customer base because it's a U.S. customer, but to me that's almost less interesting because the U.S. customers have better access to most of these things than the international customer does. Obviously, like pre-IPO perps, nobody does other than on Hyperliquid. But like prediction markets, like there's a lot of prediction market access in the US that doesn't exist internationally, and et cetera. But fine, great. Like I think they have to do it, and it looked nice and smooth, and I'm on board with that. Then there was the developer platform stuff, which I didn't really get how it was that different, to be honest. It felt like maybe, okay, well, and I talked to a couple of the guys afterwards, and they're like, well, listen, like it wasn't that we were necessarily offering a new product, but what we did is we took a bunch of features and we made them more productizable for the people who wanted to step into the and use the developer platform. And that's great. So maybe I just didn't understand the nuance there a little enough, but that seemed like positive. I thought the consumer finance stuff was actually super interesting. And I think maybe I'm a little bit, I've said this to a few people, but that seemed to me like the most, innovative or outside of,
Is this the AI investment advisor that they registered?
Yeah, because it's in the RIA. So they announced 2 things on AI. One was like, okay, well, you can bring your AI agent and like connect it to your account. And that is sort of like whatever. I think there's like probably 6 people who will do that. Robinhood announced the same thing. But having the AI advisor in the RIA, in the regulated RIA, I thought was actually pretty interesting, because I do think there's this world where like Gen Alpha or Gen Z or whoever, like, they're already asking Claude, like, what should I be buying? They're not like, doing the research that Jordi is doing necessarily. And so I think there is a world where we have a lot of people who are, this is how they're going to interact with like trading and investing. And so I thought this was interesting. I do wonder what it means for like their legal surface area and for like, potential lawsuits. But I think with them trying this is like very interesting and cool. And I thought the Bitcoin backed mortgages were cool, and the where it's like, they can be used in Fannie. And so I thought that was super interesting. And then they had the base and the payment stuff. The payment stuff, of course, sort of seemed par for the course, a lot of what they'd already talked about. And then there was base stuff. And the base stuff was the main thing that he said there that I thought was interesting was, inherent privacy, a transaction level privacy. They didn't explain how they're achieving that. So I'll be interested to see what happens, how they're going to achieve that. But that is obviously very topical right now and interesting, and also has a lot of knock-on effects to like the payments business and to, the other businesses as well. So those were sort of the groups. it didn't feel to me like they were taking risks, but like maybe they're not supposed to be taking risks at this point. But I thought there was it was a sort of a mixed bag, but overall good.
It's sort of like their brand, right? Like they have this very institutional brand. You don't think Coinbase and think like I'm going to get rich quick. You think Robinhood, like, oh, maybe I'm going to hit my, one day option. I'm going to get rich, and you kind of have that association with the brand. Their brand is like, less exciting, but maybe more trusted. So you don't lose you lose the FOMO crowd, but maybe you get like a bit more like serious crowd. I don't know which one is
Well,
the
that
bigger.
said, they did launch options on equities on so maybe you'll get the 0-day options there too.
It's not about the product. It's just like,
Yeah, I got it.
are people going to Coinbase with that goofy, like the kind of very clean logo and the thing, or they're going to Robinhood and they're, they want to make it now. I mean, I'm not saying it's a good thing. Actually,
You get the confetti when you make a trade, and you get the the noise, the sound effects. So, guys, I got to jump. Sadly, I'm sorry. Content of the week. I'm going to accelerate the content of the week. This is a good chat, Jordy. We got to have you back on. Jordy, we do content of the week. I'm sure you're a diehard listener and you make it to the end of every episode already. So you knew that, but
like this is one of the few podcasts I still like tune in. Maybe this is the one I tune in the most. So
mission accomplished. You heard it here, ladies and gentlemen.
Rob, content of the week, kick us off, my friend.
I mean, there has been no content for me this last week, whether it's Knicks content or World Cup content. I'm telling you, like that is 100% of all the content that matters. I have the parade on in the corner over here.
Rob, I started by saying New York is electric right now. So,
it is.
I feel bad for Santi and Jordy just in the failing state of Europe over there. Like, what are they doing?
Yeah. And listen, and you see all these all this stuff on social now. Like the World Cup is here in the U.S. and all the Europeans are like, we were lied to. Like In and Out is the best thing ever. And like
Roberto, the World Cup is in the U.S., Mexico, and Canada. Okay,
that's true. There's been some really interesting stuff coming out of Mexico, like because South Korea played
Roberto.
Roberto, I'm telling you. Okay, Roberto. The odds. I'm going to tell Roberto until the World Cup finishes. Percentage probability of the U.S. winning the World Cup. It's a 2% in Polymarket.
That's
this is the trade.
4% on Polymarket right now. And I'm going to tell you right now, on Polymarket, I put down money that they would win the World Cup, and when it was at 1%, and that they were going to beat Paraguay by more than 2.5. Look what happened. So, and by the way,
forget about memory stocks, forget about crypto, just trade pod.
You know what I'm doing after this pod? I'm getting on a flight to Seattle to see them tomorrow against Australia. I'm going to paint my chest. I'm going to be on TV. I'm going to be right there. USA.
I love that.
That's the content.
Jordy, follow that up, my friend. Content of the week.
The only time I have for content is like 30-second Instagram reels, and my obsession right now is healthy ice cream. This has like changed my life. Like I
know exactly. Yes, go. Sorry.
There's all these people making Ninja Creamy recipes.
The Ninja Creamy changed my life.
I changed my life. I'm so passionate.
By the way, I saw Ninjas on sale on Costco, or was on Costco. So
yeah, Ninja Creamy. Yeah.
Nice. So that's my content.
Jordy, we got to share recipes, my friend.
Yes,
this is good.
Exactly. That's my own.
You know what they say. You've reached adulthood when you have not one but two Dysons, and then now, of course, thinking about homemade ice cream recipes.
The Ninja Creamy is the new. Yeah.
Ninja Creamy.
You gotta get them to sponsor the show. Santi, what do you
got? 20 BC. Henry Stebbings interviews the CEO of Perplexity. Really interesting. I listened to it like late at night. I couldn't go to bed. Like fucking electric. Go listen to that.
It'll make you want to long more memory stocks. I will say that.
I'm long. Markets up today, so I'm happy.
I know. All right. I will I'll bring it down a notch. I got the Nadal documentary on Netflix is incredible. It is one of the best sports documentaries. Oh yeah. I mean, they talk about that. He's got the wedgie. This won't ruin it. He that dude was loaded up on painkillers like for the second half of his career, and the public had no idea, or maybe they did. I was a fan of Nadal and the Murray and Federer and the rivalry. But at the time, I mean, I was younger, like had no idea that he was in so much pain. It's a documentary that shows you like how far the human body can be pushed. It's really, really good. So
I think tennis might be one of the more decorate. Like if you look at a tennis player, he looks like that is like 20. He looks like he's 40. It's crazy.
yeah.
I don't know what.
Well, and you're in the sun every day. All right, folks.
Yes, sir.
Jordy, good to see you, my friend. Roberto, enjoy the game. Santi,
Jordy, you got to come
you
back.
look like you're about to play a little Wimbledon here.
I play tennis.
Yeah, nice.
I'm picking back up. You guys should come. You know what? My favorite clay courts. I'll invite you guys next year. There's a tournament out here. Really, really good. Better.
You saw what happened when you invited Rob and me to Monaco. We don't want to.
We'll make ice cream. And then we'll have.
You haven't
Jordy-
seen. We didn't play tennis. Santi was worried about what would happen.
No. Hasib took over the gym and was taking creatine.
We're all out at this, at this beautiful beach club, and Hasib's like, "Where's the creatine? Where's the creatine?"
He brought his dumbbells to the club. All right, folks.
Ladies and gentlemen, a good time to end it.
Enjoy the World Cup. Go US. Cheers, folks.